Here we are with Will Robinson, VP of Engineering at Coinbase. Will, it's so great to have you on the show. Welcome.
It's great to be here. Thank you so much.
Coinbase is obviously a giant in crypto. It touches basically everything we do in this space, from the biggest centralized exchange in the US. It also has a great non-custodial wallet, one of the most active and biggest layer 2s on Ethereum, is also part of the Coinbase family. And recently, it already has a big presence in the OnChain DeFi world, but it feels like now DeFi is becoming an even bigger part of Coinbase, even on the kind of CeFi side of things. So that was super interesting for me to see. And I'd like to start with that, but we will touch on like all the other pieces along the conversation. But let's just start with the most recent kind of DeFi related news at Coinbase, which is Bitcoin-backed USDC loans powered by Morpho. Super interesting. So if Will, you can just kind of explain what this is about, how this works, and then we'll get kind of in more into the details of it.
Absolutely. I'm really excited about this one. So let me start with what the user will experience, and then we can dive into the implementation and cover whatever topics you want. So from the user's point of view, if you're a Coinbase user, you come to Coinbase and you hold Bitcoin on Coinbase, you can now go to this new feature, these Bitcoin-backed loans, and say, I'd like to collateralize my Bitcoin and take out a loan against that collateral. So your Bitcoin is going to be stored as cbBTC on a DeFi protocol, and then you're going to be able to take down a USDC loan and get USDC into your Coinbase account, ready to go, borrowed against that Bitcoin. You can monitor that loan, you can pay it back, you can take out additional USDC from that collateral. So it's a way to get access to liquidity from your Bitcoin without selling your Bitcoin. All of this from the end user's point of view starts with Bitcoin in your Coinbase account and ends with USDC in your Coinbase account, and that Bitcoin collateralized in a DeFi protocol, Morpho.
And that's super interesting because usually it's really hard to do things with Bitcoin, right? Bitcoin holders are famous for hodling forever. And because Bitcoin, at least up until pretty recently, and I know there's a lot of work being done to improve this on the Bitcoin side, to make Bitcoin more programmable, but those are just still very in the very early stages of development. But broadly speaking, there's not much you can do with Bitcoin on the Bitcoin blockchain. So this is a really interesting way for Bitcoin holders to actually, get more liquidity out of the Bitcoin that they're holding.
That's exactly right. I mean, we're really excited about all the innovation that's happening on the Bitcoin blockchain itself, on Bitcoin layer 2s. That's a space that we watch and we're really excited about as well. And also, we want to give people as many options as they can have today. Coinbase is ultimately all about economic freedom. We've got a lot of users who are choosing to custody several $1 billion worth of Bitcoin with Coinbase. Like that's a preference that they've clearly expressed in the market. That's where they feel safe. It makes sense to them. And we want to give people additional options and ways to make use of that Bitcoin that they haven't had before.
Why the decision to go with Morpho?
Yeah, great question. So there's a bunch of reasons, and we looked at a lot of protocols, and there are a bunch of great ones out there. We've gone with Morpho as the protocol we're providing access to with this initial version of the product for a couple key reasons. First of all, it is in some sense minimal. It does just what we were trying to do here. It is not also a money market. There's no cross collateral. It is set up already to do things like single asset collateral, cbBTC, Bitcoin in this case, single asset loan, USDC in this case. It is a very small implementation. It's about 600 lines of code in the core implementation. So that makes it more tractable to do extensive audits, to do formal verification. So from a safety perspective, it rates very high. And we were really impressed with the team as we worked with them as we talked about them coming alive on Base. It was just a team that was really solid from top to bottom. So it was a perfect fit for the product that we were trying to launch. And it had all these desirable characteristics from a security and simplicity perspective as well.
So from the user's point of view, who are on Coinbase using a centralized exchange, holding Bitcoin there, and then taking out a loan, but that's using DeFi in the back end. How does Coinbase communicate the risks to the user to actually for them to know that, okay, now you're not just trusting Coinbase with your money, you're now trusting this other DeFi protocol, Morpho. How to make sure that the user knows what they're getting into, and also if you can expand on those risks.
Yeah, great question. So we do want to be very clear and upfront with what is happening to the user's assets as they do this, the additional risks that they may be taking on. Of course, we worked really hard ourselves and with Morpho to minimize those risks, but we're here to be very transparent about those risks. So in the product, as you go through the flow, you say, okay, I'd like to take out one of these loans. We show you an informational screen that gives you a high-level summary right there in line in the product. This is what is happening. You're relying on a third-party protocol, Morpho, and a link to read much, much more. And you can go all the way down that rabbit hole to Morpho's docs and their open source code and as far as you want to chase that thread down. But we put those in front of you, and there's no way to get to this lending experience ultimately without at least seeing and reading the high-level summary of the risks and with a chance to go read more. What are those risks? So I can't promise this will be exhaustive, but I'm going to do my best because, again, we're not trying to hide any of these risks. We want people to understand what's going on here. So there is smart contract risk, both on the cbBTC wrapper contract itself, right, which is as simple as it can possibly be. This is a one-to-one wrapper for Bitcoin held custodially at Coinbase. If there's one Bitcoin in our reserves for cbBTC, that maps to exactly one cbBTC. That is never rehypothecated. There's nothing complicated going on there, but there is an ERC20 smart contract on Base, on Ethereum, on Arbitrum. There's a similar contract now on Solana. And that contract needs to be correct and make sure that it's mapping one-to-one with this backed Bitcoin. So there's smart contract moving part there. And then there's the smart contract risk of Morpho itself. And again, Morpho, it's about 600 lines of core code, about as simple as this protocol can be, audited by multiple auditors, formally verified. But you do take on that risk as well. It's got a few years of Lindy, no incidents that I'm aware of, and we investigated that pretty carefully, but that is risk that the user needs to quantify themselves. And then the current product that we've launched also runs exclusively on the Base blockchain, which is an L2 sitting on top of Ethereum. And so there's some chain risk. Obviously, the Base chain has a very, very good track record of uptime and liveness. And it's something that Coinbase is very dedicated to making sure is the best L2 in the world. But you are interacting with the chain to initiate the loan, and you will need to interact with the chain again if and when you want to repay that loan and retrieve your Bitcoin collateral. And so if there is some catastrophic liveness problem with the Base blockchain itself, then that is an additional risk that you're taking on that you didn't have when you were just hodling your Bitcoin on Coinbase as a custodian.
What about the liquidation risk? I mean, that's obviously comes with taking out a collateralized loan, but what's the kind of collateral ratio there? Yeah,
great. Thank you so much. And exactly as you say, so obvious, I forgot to mention it. You're taking out an over-collateralized loan. If we live in DeFi, we're so used to this, but it is going to be a new concept to a lot of the users who are doing this for the first time, and that's really critical to highlight as well. We do try to make that very clear in the product as well. So you're collateralizing, let's say, $100 worth of Bitcoin, and taking down a loan of, let's say, $60 against that. And there's some threshold based on the size of that loan where if the price of Bitcoin falls low enough while you have that loan outstanding, then some or all of your collateral can be liquidated. That means agents there's an automated process that will take some of that collateral, sell it for USDC on chain, and something like Uniswap or however they want to affect that, and repay your loan for you. So you have to be aware of the price of Bitcoin and how aggressively you've taken out a loan. The larger the fraction of your collateral you've taken out as a loan, the riskier that loan is in terms of the possibility of getting liquidated. So it is something that you need to be aware of and monitor. And if you want to be more conservative with that as a user, you have the option when you're taking out the loan of saying, you know what, I want to take out a smaller loan against this Bitcoin, or I want to add more collateral to the loan. Off the top of my head, I apologize, I don't remember the exact numbers that we've launched with in terms of guards on the loan to value ratio. I think it's 80%, but don't quote me on that. And again, you have an option to move that slider around. We have launched with a somewhat more conservative guardrail in terms of the max LTV you're allowed to take out versus what the underlying Morpho raw protocol would support if you were calling it directly out of the box. But the user still does need to manage that liquidation risk themselves ultimately. And I've just gotten a message, apologies, it is 86% that is that max LTV that we allow.
Got it. Perfect. Do you have initial numbers on demand for this product?
Yeah, so we're rolling it out slowly. I mean, this is the first time we've done something like this, and we want to very carefully watch how the users are responding to it, both how much they're using the product, but also are they running into difficulties? Do they have new kinds of questions? Is our support team ready to answer those questions, right? So we have been rolling out the launch progressively. I think it's enabled for just over 10% of users in the US at this point. We're not sharing exact overall loan numbers or overall collateral numbers, but there are Dune dashboards out there that you can find with just a little bit of Googling, because all of this, of course, is on-chain, and it's not that hard to piece together where are these loans coming from, who's originating them, and so you can dig into those if you're a very curious listener. But I will say that we're very happy against our expectations with how many loans have been taken out this early in the game, and with a rollout that's only enabled it for about 10% of US users. We're seeing about 100% week over week growth as people try this, tell their friends, and we're really, really happy with the results so far. And just on a personal note, I myself took out a substantial loan last week. Yeah, and not to test the product. I mean, we were testing the product for months, of course, internally, but I needed to do a thing. I needed to unwind an unrelated DeFi position that I'd held open for a couple of years. And I was thinking, oh my gosh, okay, I could wire some money in. And I said, wait a minute, there's an app for this. I've got the Bitcoin. This is perfect. I did it, took out a very substantial loan, did what I needed to do with those dollars, repaid the loan, that same day in my case. I think I had accrued something like 50 or 75 cents worth of interest, paid 50 or 75 cents worth of gas fees. And it was, even though I've been there every step of the way as the team's been building this product, it still felt kind of magical to me to make this use of my Bitcoin and to do it so seamlessly right from within the Coinbase app.
That's so cool. And great to hear that you are an active DeFi user yourself.
Oh yeah, that's why I'm here.
Nice. Okay, and about your, the decision to use cbBTC and actually to launch cbBTC. I think most of my listeners will know, but still, the most used wrapped Bitcoin for a while has been WBTC, and obviously this is an ERC20 token that allows people to again put Bitcoin to use on Ethereum. So it's a wrapper, and it's recently become a bit controversial because Justin Sun of Tron has taken ownership over Wrap BTC.
Never heard of him.
Well, lucky you. No, I'm kidding. But very controversial character. So maybe that had something to do with cbBTC being kind of the chosen collateral for this instead of kind of the more widely used wrap Bitcoin. But, how do you go about thinking about these things? Because obviously, like Coinbase has its own products. So I think it's logical for it to choose its own products versus other products that are already in the market, but at the same time, those products have more trust, are better known, maybe have more liquidity. So yeah, how do you think about these different decisions and implementations?
Yeah, thank you so much for asking about this, because I was also super involved with the cbBTC launch late last year. And I've been waiting for this launch to come back out and talk to people, because if people are looking at this launch and saying, oh my gosh, is there like a master plan around cbBTC? The answer is basically yes. I'm not here to talk about any other asset or Bitcoin wrapper. Like I want to really focus on Coinbase's vision and what we're trying to accomplish strategically here. So at the end of the day, we are, I think, the largest, or certainly among the largest, Bitcoin custodians in the world, all in, and have among the longest track records for being such a custodian. So the insight here is there are many, many billions of dollars worth of people trusting Coinbase as their Bitcoin custodian, and there is a ton of value to be unlocked by having more Bitcoin be active on chain. So again, without talking about any other asset, just like putting those two insights together, it's not that complicated an equation, right? We've got all this Bitcoin that our users are custodying. There's presumably a large latent demand from some of our users, at least, to do more things with that Bitcoin. We can unlock those things by creating this wrapper as this trusted custodian. For users who just want to hodl Bitcoin for decades, give it to their grandkids, and want to do that on Coinbase, we love those users as well. Nothing needs to change for them. But for users who do want access to more utility, this is the most straightforward way to give them that, while letting them continue using the custodian that they've already chosen and that they already trust in droves. There's also a mechanical piece that we don't give formal tax advice. Everyone's jurisdiction is different. The guidance in most jurisdictions is not always crystal clear. But when it comes to wrapping and unwrapping custodial Bitcoin that you've been holding with Coinbase to and from cbBTC, what we are reporting on our tax obligations for our US users is we're not reporting that as a taxable event, as a token swap. Our analysis of that and what we're reporting on 1099s and so forth is that is not a taxable event. That's just a sort of renaming of the same asset you're already holding. And so there's a mechanical piece there as well. If you've been hodling Bitcoin for 10 years, congratulations. And if you'd like to collateralize that but not realize a bunch of capital gains, then we think that the most straightforward way to tell that story for you may be to use cbBTC, keep the exact same custodian that you've always had, and we think that that's a unique advantage that this choice has as well.
That makes sense. And then just to learn more about how cbBTC works. So is cbBTC issued when Bitcoin holders on Coinbase want to exchange their or wrap their Bitcoin? Is that kind of the only way that cbBTC is issued, or is there another way where Coinbase just wants to, issue cbBTC to the market so that it can be bought on kind of secondary markets, on exchanges, and facilitated to users who are not custodying Bitcoin on Coinbase?
Yeah. So the way cbBTC comes into the world is that someone with Bitcoin on the Coinbase platform sends that Bitcoin. We present it to users as a send. Say, okay, I want to send this Bitcoin, but I want to send it to Ethereum L1, or I want to send it to Base or Arbitrum or Solana. And when you do that send, we say, great, as part of this send, we're wrapping this Bitcoin as cbBTC, and then we're going to send it on chain. There are some large institutional players who have done this, with size. There are some market makers that have done this with size that want to go then provide liquidity and DeFi protocols. That's not something that we are directly facilitating ourselves or doing with our own corporate balance sheet. But that is the way that cbBTC comes into existence, and it gets burned and converted back to BTC in exactly the opposite way. If you have cbBTC on some chain and you send that into your Coinbase account, then we will, when we receive that cbBTC, we will burn the cbBTC, unwrap that to one for one the same Bitcoin, and then credit that Bitcoin into your Coinbase custodial account.
Okay, so the way that cbBTC becomes available on secondary markets, it's when larger institutional players, market makers, who are custodying Bitcoin on Coinbase, send that Bitcoin elsewhere,
right, onto Ethereum or onto Base,
and Base, and wrap it with cbBTC, and maybe they set up a pool on a DEX or something, and that's how it becomes more liquid. So it's not Coinbase doing that, but more Coinbase users who are doing that.
That's right. Yep. Coinbase users who have Bitcoin held custodially on Coinbase. And incidentally, like this lending mechanism we've been talking about is another way cbBTC will get created. When you collateralize your Bitcoin to take out this loan on Morpho, cbBTC is getting created to wrap that Bitcoin. And then that cbBTC is put on chain in Morpho. There's another really interesting implementation detail. I don't know how deep you want to get into this, but we actually create a self-custody wallet for the Coinbase retail user to facilitate this loan. It's not Coinbase originating the loan. It is Coinbase providing a software service via self-custodial wallet that is letting people access this lending protocol on Morpho. And that self-custody wallet is keyed off the passkey on your phone or your device. And so that is a really interesting kind of tech tree unlock that's been part of what has allowed all of this to happen.
Is that the Coinbase non-custodial wallet that that anyone would use, or is it is it like the main non-custodial wallet by Coinbase, or is it like a separate one, like a different one for this?
I know it's hard to keep all these wallets straight. It is separate. It is different. It is a purpose-created wallet whose only job is to manage this borrow transactions. So the creation of the loan, paying back the loan when you pay it back. It is purpose-built. It only does that. It is ultimately under the user's control via a passkey on their phone, but it is completely separate from if you also use the Coinbase Wallet app, that kind of full-featured wallet where there's a browser and you can have arbitrary tokens. It is a separate thing. So this is a behind-the-scenes kind of hidden from view self-custody wallet that we've created for each user as they open a loan.
Okay, and speaking of the Coinbase Wallet, I wanted to talk about this because I just think it's interesting that Coinbase also has a non-custodial wallet. I don't know, I'm not 100% sure, but I think you were one of the first centralized exchanges in the US to have this. So I think it's great that you have this like CeFi, DeFi, side of things. Mm-hmm. And I know that you don't have specific numbers, but I love at least your kind of anecdotal sense of whether the Coinbase Wallet is enabling a bridge between CeFi users onto Web3, or do you think that, or have you seen that most Coinbase Wallet users come to the wallet first, not through the centralized exchange?
Yeah, that's a great question. I don't have a stat on that last question off the top of my head. I think there is a high overlap between Coinbase Wallet users and Coinbase retail users, but not a total. Neither is a subset of the other. What I think qualitatively we would say is there are people like me, like you, and probably many of your listeners, where you use a little bit of DeFi, you find out a little bit about this world, and your eyes get big, you get obsessed, you say, I want to touch all of it, I want to understand all of it, let me play, let me go. And a full-fledged, standalone self-custody wallet like Coinbase Wallet is perfect for that. And you and I also know from our experience that there's a pretty abrupt learning curve there. All of the additional concepts that you need to get familiar with. Okay, here's your seed phrase. Write it down. Don't lose it. Don't get phished. You've got to use this browser that's in this same app. You've got to connect a wallet. That flow looks different from sort of app to app and site to site. it is an intimidating world for many people to approach. And for a lot of people who might be curious about crypto assets, might hold some Bitcoin, might want to do one or two other things with that, but they see this learning cliff, not a learning curve, and they bounce right off. And they say, this has to be a full-time hobby for me if I'm going to touch this, and I don't care that much. And so with the CeFi DeFi kind of mullet that we're launching in things like Borrow, we're hoping to find a great middle ground where we can give a lot more utility to people who want to do something more but not take that full plunge. However, for all of us enthusiasts out there, we also want to be the best wallet in the world, the best standalone place to come to and say, I want to live more and more of my financial life on chain. I want to be at the bleeding edge and experimenting, and I'm willing to mount that learning curve. And so we're trying to kind of cover that whole spectrum and smooth out the spaces on that spectrum over time, right? So the standalone wallet experience, the cross-chain interop, like all of those things are getting easier and easier each month, quarter, and year. And so over time, we think that this will be a much more fluid kind of graduation path up and down. But for now, we felt like there was something really missing in the middle. And that's what we wanted to address as we launched our DeFi Borrow product.
Yeah. Okay. So that's a really interesting take, the DeFi mullet. And I think, it's a concept that's been in the space, I think, since the very early days of DeFi, because it just makes a lot of sense, right? Like you have a Web2/CeFi app that people are comfortable using, that they know how to use, that it looks familiar. But in the back end, that same app is using DeFi rails to enable more functionality, more yield, whatever it is, to the end user without the user having to actually use DeFi themselves. If most people for now are not used to that. So I think it's a concept that makes a lot of sense. And, from kind of what you're saying and how you're thinking about this, I would imagine, it's a strategy for Coinbase, right? So are you thinking of integrating more DeFi protocols on the back end? And I'm sure you can't say which ones, but like what's your thinking, or like what use cases would you like to unlock?
Now that would be telling, Cami, and I've got to string this out, so I've got excuses to come back and talk to you in future months. But I would say, in general, let's say we are very excited and bullish on the prospects of bringing more and more of people's financial lives on chain, making that a compelling value proposition for them, so they choose to do that, and bringing more and more of what is amazing and unique and new about this on-chain financial system to the masses, right? I mean, taking out that loan myself last week, it was instantaneous, 24/7. I could repay it instantaneously. I have access to a truly global pool of lending liquidity, right? People who are putting up the USDC, and thus I'm getting a truly settled global market rate for the interest that I should be paying on that, right? Like, this is a financial primitive that feels almost obvious, almost boring to us if we've been playing in DeFi for years. But when I go back and talk to people who are outside of crypto, and I hear what their experience is, like, well, I've got a stock portfolio, I want to get some dollars, it took 3 weeks, I had to get something notarized. Like, it is night and day. And, that is so in your face when you have this borrowing experience. And I think there are a lot of other experiences like that, that I would be really excited to enable for users as soon as we can. And I'd love to come back and talk to you about it sometime soon.
Definitely excited to see what you integrate next. Do you see more CeFi fintechs and even traditional finance institutions implementing DeFi? Like, is your sense that this is more of a niche thing, that DeFi is going to be integrated, or do you think that DeFi is ready to take on lots of these integrations across even the biggest financial firms. Like, where in that kind of cycle do you think DeFi is?
Yeah, so I think there's always a spectrum. I think that the most mature DeFi protocols are ready. They've got more to give. They're ready to take on larger and larger customers. I think that the risk calculus and the conservatism on the other side of that table is probably the long pole. And that is one of the great things about working at Coinbase, is that we have these sort of like specialized skills, expertise, connection to this community so that we can kind of be in that unique zone where we are a large financial institution in some sense, but we can also be a trailblazer in this way and get, I would guess, like several years of experience offering these kinds of products to our users, and hopefully in the long run actually help other large financial institutions who say, okay, well, we see what's happening here, we see what you're doing, it's really compelling. We've got customers now coming to us saying, why is it taking me 3 weeks to take out a loan? I can do this on Coinbase in 5 minutes in my PJs, right? Help us, right? And I think that over time, with things like our Coinbase developer platform, right, we want to, where desired, also be a bridge that other people can build on top of without needing to develop deep on-chain expertise, wallet management protocols, all the things that we've built and crossed these bridges first.
Okay, so do you think Coinbase will be kind of a facilitator for traditional for TradFi to get into DeFi? So it would be like TradFi, then Coinbase, then DeFi?
It's one possibility, and a pretty distant possibility. It's not really our focus right now. I'm just speculating. I think that we've got our vision very full right now of wanting to offer as many things to current crypto users, to current Coinbase customers, as we possibly can to prove out this model. And that is plenty exciting for this year, let's say. But if any TradFi folks are listening to this and their ears are perking up, we'd love to chat.
Is there a world where, like you said, like Coinbase is already a big financial firm? I think it's kind of, especially with all these different financial services that you're offering, I think it has started to kind of evolve from just a crypto exchange into like you mentioned, just like a financial firm. How likely, or is there a world where companies like Coinbase that started out as very crypto native just become the financial companies of the future, where most of the world get their financial services from?
I think that's absolutely a possibility, but I want to tweak your wording a little bit, right? I think that the way that happens is most of finance becomes embedded within crypto and crypto rails. And in that world, a company like Coinbase that has been leading the way on crypto and crypto rails, I think is very well positioned.
Makes sense. So it's natural in kind of, if the progression of finance is to increasingly come on chain, companies that have been on chain from the start are really well positioned to be the leading financial companies in that kind of ecosystem where most assets are on chain.
Exactly. We get to do our Bain impression, say we were born on the chain. You're just visiting it.
Yeah. Okay, and then speaking of on-chain, another important on-chain piece for Coinbase obviously is Base, the layer 2, which now it's one of the biggest L2s, or the biggest, depending on which metrics you're looking at, TVL, throughput, activity, and so on. What do you think are the factors that have allowed Coinbase to climb to that position, and or Base to that position, and also how has it leveraged Coinbase itself to make Base so big?
Yeah, it's a great question. It's a big question. And I hope you can get Jesse on sometime soon as well, because he can give the authoritative answer to that question. But from my point of view, I see Base as playing at a really interesting intersection where we get some superpowers as a large established company, where who you can call. If you're a large institution saying, I want to dabble, I want to come on chain, okay, I can deal with a public American audited company. They're still going to be here tomorrow. You really appreciate that sort of benefit of having a player like us in this space. At the same time, I know that we're not yet at the stage of decentralization that we want to be with Base, and that's a totally fair thing for people to point out. I also know from firsthand experience just how hard the team is working on that, along with folks from the OP labs, OP stack in general. And so that's, the proof will be in the doing, right? But that's not just lip service. So we believe that the medium-term destination for Base is you're going to have sufficient decentralization, the kinds of safety guarantees that you're looking for a stage 1 or stage 2 roll-up, while also having the kind of weight and attention and resources of Coinbase investing in this chain, both on a technology level, but also, frankly, like on an ecosystem BD marketing level, right? Like having an entity like Coinbase that can say, hey, we're here, our interests are aligned, right? We make no secret of the fact that like Base is a good business for us as well, but we also deeply believe in an on-chain future, and we want to make it happen. We're going to help make it happen. We're going to help promote your great things that you build on Base, connect you with other builders, right? Like do all these things that we can do as Coinbase. And I think that if we can thread this needle correctly, then it is a win-win for us, for the Base builders, for the Base users. We've got a distribution flywheel in terms of Coinbase users, where we can put really exciting things on Base, like the Morpho lending protocol in front of them, front and center. And that's a really unique value proposition for end users and for builders. And I'm just so thrilled with what's happening on Base.
Can you talk more about the decentralization part of it? Like, what's next? Like, what needs to happen for Base to become sufficiently decentralized?
Yeah, and I apologize. Like, it's been a little while since I've been directly involved on Base, and so I just don't have the up-to-the-minute details on that in my head. But I know that Jesse and the team would be happy to follow up with you on that.
Okay, and then one of the major debates on Ethereum right now is regarding layer 2s and whether they are giving back to the main chain what they should. There's this narrative that layer 2s have become parasitic to Ethereum. They're taking all the activity away, and Ethereum has become inflationary. So that they're kind of a drain on Ethereum and causing ETH, the cryptocurrency, to underperform. So yeah, a lot of kind of angst in the timeline from the Ethereum community because of this. I'd love your point of view on whether layer 2s are actually parasitic or not.
Yep. So obviously a really hotly debated topic and a complex one. So I'll offer my opinion very lightly. So I think we're living right now through the downsides that people correctly pointed out about the roll-up centric roadmap from the beginning, like from before there were roll-ups, right? Okay, you can have all these roll-ups, then how do they interoperate? Won't that be awkward, right? And I think we're now in that awkward adolescent phase with a lot of work to be done on cross-chain interop. I do think that work is doable, right? Like it's hard, but it is just a matter of doing. And once it is done, we will look back on this awkward adolescence and say, I can't believe that picture of me back when I was in high school. But it will be a distant memory. I think for our part and for a lot of other folks at Arbitrum, folks at OP Labs, like people are working in good faith on more capacity for blobs, on cross-chain interop. And Coinbase itself, like we've got a track record of really investing, like working on the EIPs and the implementation across a lot of different Ethereum clients for like the original blob rollout itself, right? Like we are putting our money where our mouth is and saying we want to invest in the foundations, both on the L2 side and interop, and also for ETH L1. So, I really do believe that it is a win-win, and that, every player in the game, as you kind of would expect in this crypto-economic universe, is incentive aligned to make this work globally, right? Like I think everybody is better off the sooner we can increase capacity even more, and get to a better cross-chain interop world. And that's certainly how we're motivated at Coinbase.
There was this recent announcement as well from the EF, this open intent framework, I think, that is aimed at what you're doing what you're talking about, making layer 2s more interoperable, having a standard for intent that hopefully make transacting on layer 2s more seamless, because right now the experience is it's pretty painful as a user to have to have all the different gas tokens and bridging and so forth. Looking forward to that, to looking back at this like awkward teenage phase for Ethereum.
Me too. My mom used to say, "Don't wish your life away," right? Like it'll be great to grow up, and also I want to make sure that we aren't waiting for perfection, right? And one of the things that really inspires me about Coinbase is that we do try to strike that balance. And things like the Borrow launch that we're talking about largely today, saying, hey, this is a great thing that can exist in the world right now that's ready for prime time. And so even as a big chunk of the company is working toward a better and brighter and grown-up future for the ETH L2 ecosystem, for the on-chain ecosystem as a whole, we want to make sure that we're also adding all the value we can right now.
So you were talking about this, other big problem, cross-chain interoperability, which I definitely wanted to ask you about, and now we talked about it. But I was originally asking about how this kind of tension between the Ethereum Layer 1 chain and Ethereum Layer 2s, and I'm just wondering kind of what the long term looks like for the Ethereum Layer 1. Like, is there a, like, I don't know, like, is kind of the long-term view that there will be so much activity on L2s that will eventually reflect on Ethereum Layer 1, or like, what's kind of the end game?
I apologize because, again, like too obvious to even say out loud, and only obvious in my head. Of course, I should say it out loud. Mm-hmm. The reason my mind immediately went to cross-chain interop is that I think once you have a universe where users are not thinking or noticing which particular chain assets are moving from and to, they're all native or based rollups. Like the interop works seamlessly. Their wallets all support this. Their smart contract wallets exist on everything, right? Like in that hoped for grown up interop world, now you're back in a state where it all just feels like one thing, and that one thing is doing hundreds of thousands, millions of TPS, all ultimately settling down to Ethereum L1 DA, largely through blobs. Maybe it's all ZKs, right? Like all of these things can sort of evolve independently, but at the end of the day, in that world where you've got great cross-chain interop and the strongest settlement layer in the world in Ethereum L1, and all of that volume ultimately needing to settle onto scarce L1 DA, if they want that strong assurance, I think that supply and demand means that the utility of ETH is now the highest it's ever been. What that does to asset prices, I'm ultimately not a trader, right? And I'm not here to give financial advice. But I think that if we live in that grown-up world, you've got that seamless interop, it all feels like one chain, and it's all paying to settle down to ETH L1. If ETH the asset is now not doing well, nobody can blame the L2s at that point. Like they've done what they should do, and it is accruing maximal value to the base chain, to the ETH L1 chain, I should say.
Okay, yeah, that makes sense. So yeah, it depends on all these pieces kind of falling together, ultimately enabling just a better experience, which will drive more activity, which will be in the end reflecting on the Ethereum Layer 1. And speaking of Ethereum Layer 1, this conversation and has been focused on Ethereum because Coinbase has been, at least on the on-chain world, very much kind of Ethereum focused as well. But recently you've also done some things on Solana. I think you launched a cbBTC on Solana. So what's your view there? Do you have like an explicit kind of pro-Ethereum bias, or is that kind of your first step? And are you looking to expand to other chains next, or kind of what's your thinking there in terms of like multi-chain?
Yeah. So ultimately, Coinbase doesn't have a religious affiliation across chains or execution environments or anything like that. But there is a practical decision that we had to make that sort of ties to a strategic direction that we made over the last couple of years. As we said, okay, we need to gear up as a company to build more and more on chain, and the dominant cost there is how many execution environments are you working with, are you dealing with? It is hard to hire and build up a critical mass of people who know how to write smart contracts on an EVM execution environment, for example, and then you need to repay at least a lot of that cost if you want to do similar things on Solana or on a Move chain or something like that. So there is real value in picking a horse for the main application level smart contract development work that we're doing as a company. And we've been clear internally that we're focused on EVM at this moment for that. Base accretes to that story as well, of course. But at the end of the day, it's not a once and for all religious conviction, and it's not a we'll never do another. It's a practical prioritization decision of like how we can efficiently drive the world from not using on-chain things to using some on-chain things. And along that path, we can branch out, we can explore more later. In terms of core asset support, functionality for like SPL tokens, for Sol itself, that's something we want and need to be excellent at. And I'll be honest, like we've not always nailed that, especially this year as Solana meme coin frenzies have sort of come and gone. We know we've had scaling problems. We've been really upfront about those. Brian's commented on those. We've made our plans clear in a bunch of public tweets, and there's a pretty sizable team really hard at work trying to shore up the foundations of that even further. The volumes we've seen on Solana have been really impressive, really thrilling, and we want to make sure that Coinbase and our core functionality of sending, receiving tokens, doing trades is always there and is the highest quality and robustness in the world. And that's our commitment as a baseline to Solana and to all the chains that we support. So
Solana is such an interesting story because it was almost like left for dead after FTX, and then it had this spectacular rise to become really firmly in the top 5 maybe chains that people use the most after Bitcoin, Ethereum. Maybe it's BNB, maybe after that is Solana, or the other way around, depending on like what geography you're from. But it's kind of, pretty clear that it's just, at the front of the race for blockchains. And a lot of that has been driven by meme coins, like you said. And meme coins have been kind of the primary driver of activity in this past cycle. But recently, I think there's been a shift in sentiment. There was obviously a big scandal that kind of tainted the space a little bit. And Coinbase has an exchange that lists meme coins for trading and just facilitates a lot of trading activity. I'd love your thoughts on meme coins as kind of a use case in crypto. It's been such an interesting debate to watch unfold. Kind of are meme coins net kind of negative for the space? They're filling the space with scammers. They're not providing anything. They don't have any use cases. Like, why are we allowing these things to proliferate? But on the other hand, there's also kind of the argument of, this is what blockchains are for, just like permissionless innovation and trading and speculating, and people have fun with it. But the game has become rigged, so it's like, really, how real is that speculation if you're not, if you don't know the rules of the game? So yeah, I don't know. I just would love your thoughts on how like Coinbase plays a part in all this.
Yeah, tons to unpack here. So meme coins in general, it's not a personal focus of mine, and I'm not an expert, and I know that there have been many gallons of ink spilled on are meme coins real? Are they net good or net bad for the industry? And I don't think I've got just one once and for all soundbite that sums that up. I think it is more complicated than that, whatever your starting position is on meme coins. I'll just say a few fundamental things from Coinbase's point of view. So our mission is to increase economic freedom in the world, right? And when things get more complex, like that is a bedrock that I fall back on and that all of us here at Coinbase fall back on. So at the end of the day, when we talk about things like allowing, that is something where, I pause a little bit and say, well, who's allowing? Who's deciding? And certainly once you're acting on a public blockchain that, as you say, is open, permissionless, censorship resistant, I think it's very important that those stay open, permissionless, censorship resistant. And one of the things that people almost will inevitably do on an open, permissionless, censorship resistant system is create new assets, speculate on them, play more and more arcane games financially with them. Now there is a question beyond just that baseline fact of, okay, but what is Coinbase's role here? And in particular, what is the role of our centralized exchange, our listings, right? So just speaking in generally, not about any particular single coin, we have a very extensive listings process that we've developed internally, first and foremost with an eye on what do our users want and expect from Coinbase as a centralized exchange. And then we've also coordinated with regulators in the US and around the world to try to reconcile, hey, here's the process we're running with the kinds of things that you'd like us to look for. This is things like securities risk, both, does it have the properties of a security and also at a technical security level, right? Like, is this a coin that is just going to explode or, can be rugged by a super user, those kinds of kind of obvious things. Centralization risk, is this all held by, one insider? Market cap, right? Like, what is the maturity level of this thing? And thus, how ripe is it for the kinds of market manipulation you might see with a very small cap coin? And so, there are a bunch of factors that feed into every listing decision that we make at Coinbase, whether it's for a meme coin or, another kind of coin. And we do take that role very seriously as well.
Yeah. Okay. So I think that that's fair. So your end goal is to facilitate, financial inclusion, or sorry, how exactly did you say it?
Economic freedom. Yeah. Our mission is to increase economic freedom in the world. When people have freedom, sometimes they'll exercise that freedom to do things that seem stupid to you, or seem silly to you, or confusing to you, but that's their freedom ultimately. Yeah. And I think that where we see a trend, there's an opportunity that we take very seriously to try to educate, to try to inform, but ultimately we're here to increase economic freedom.
Yeah, I like that ethos. And then just having as a centralized exchange, it's I think it's good that there is a rigorous process. Because you're responsible for people's funds in the end. So it's not the same as a DEX that can just like allow anything to be on there because they're not directly responsible for people's funds. But as a centralized exchange, you do need to set the bar higher and and place all those requirements before you list a coin there.
That's right. Yeah, I mean, we're regulated by many entities all around the world that have standards of, if you're a centralized custodian, a centralized exchange, as our main business is, or our core business is, like, here's what you're allowed and not allowed to do, and we take that very, very seriously.
And to wrap up, speaking about this kind of a core value or goal of Coinbase of increasing economic freedom, Can you expand on just like the long-term vision of what you think the on-chain financial future looks like and Coinbase's role in it?
Whew, I hope you have another hour.
It's a big one.
Yeah, I'll try to condense it down. Mm-hmm. So I think you will see faster transactions. Let's start with the easy stuff. Faster transactions that settle instantaneously globally around the world, 24/7, 365. And we who've lived in crypto for a long time, like that's such table stakes, we don't even think to remember it or mention it. But I'm constantly going back to TradFi and saying, oh, the market's closed. Closed. What does this mean, right? Mm-hmm. Oh, you know, my wire is so fast, it'll settle tomorrow. Like tomorrow, you know, Ethereum finality is 12 minutes or whatever, right? Like, and even just that is such an upgrade. And just that supercharged with stable coins like USDC on these rails so that people can do the kinds of things they're thinking about with finance, but just better, just as a strict upgrade. Like that is the first thing. Again, so obvious you don't often think to mention it, but like really, really critical. And we can't skip over that for all the people who haven't touched this stuff yet. And then you look out longer, right? If you are in a hyperinflating country, if you're in a country without a robust consumer-facing financial system or banking system, or you don't trust your local banking system, in the long run, your phone's your bank, right? Like the kinds of services that you would go to a bank to get today, you should be able to access anywhere in the world if you have a smartphone that's connected to the internet. And great news. Everybody has a smartphone that's connected to an internet. People have smartphones where landlines have not been even laid across that country. The whole world, developing or developed, has leapfrogged into this state where everybody has a supercomputer in their pocket, and all of those supercomputers have a passable, serviceable internet connection. And that is all you need to access a pool of global lending and borrowing liquidity, to access the ability to swap assets for each other. In the future, you can imagine more and more things like credit scores like coming on chain as well. So you can think of under collateralized lending. How am I going to start my small business? And moving out of this world where the accident of your geography or your birth determines so much about the dry powder that's available to you to start your business, to make progress in your life, to forge a better life for yourself and your family. That all fades away, and everybody instead has access to seamless global rails. And that is the long-term vision. There's a lot of details to work through. It's not going to be utopia, but I think it's going to be so much better than what we all grew up with.
Yeah, absolutely agree. I think we're definitely heading there, and not sure, how long it takes, but it's so obvious that it's going to happen. For the very near term, I'll be looking out for the next DeFi integrations in Coinbase and just getting more people on chain.
If and when that happens, I'd love to come back and chat about it again.
Amazing. Thank you so much, Will, for your time. This was great.
Thanks so much for having me, Cami.